Chair Powell has spooked the markets once again as he testifies in front of Congress. He's going to be testifying again tomorrow, and the markets did not like what they hear. They're down 1.73 on the Dow right now, 1.6 on S&P, 1.34 on the NASDAQ. Not bad considering the last week or so as the markets have been on a rebound lately, just unwinding the latest bounce. So the question is this now the next leg of the bear market, or is this just a temporary profit taking before the next leg up continues? And a lot of that is going to depend on what the Fed actually does at their FOMC meeting and what the information and data looks like prior to that. When we get the next CPI print, jobs reports, all those types of things, if the data still comes out hot, then the Fed might go for 50 basis points. Powell said that they are going to have to look at stepping up the pace of rate hikes, and obviously that rates are going to stay higher for longer. The latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated. So the Fed, consistent theme over and over is, we didn't expect this. We didn't expect this. So, they've really lost credibility. The market's reacting to that. And, there's still a lot of capital out there that, needs to be put to work and that is being put to work. That's what's keeping markets propped up. Because at this point, the economy is still strong to where recession is not a real concern yet, just higher rates, which obviously equates to repricing of assets. This isn't surprising news, but it's tough. It's a tough reminder for markets after such a brisk rally, said eToro U.S. investment analyst Kaylee Cox. The Fed's top priority is getting inflation down, and for good reason. People are starting to factor in persistently higher inflation, which could be the worst case scenario for long-term investors and run the risk of prices spiraling higher. And that's the biggest risk right now, is that prices are just out of control and the Fed is not going to be able to stop it right now. And I think everybody watching this, I think, I haven't seen anything come down. I don't know if you have. It seems like prices are still going up pretty much on everything, including fuel, which is getting ready to spike. But anyways, the Dow right here getting ready to retest, this level here. And, if that continues to hold, this is a range that the Dow is just trying to kind of consolidate. If the Fed raises 50 basis points, we're going to go back and test these lows in October, most likely. Pretty much the same thing, for all of the indexes right now. And if we take this and put on the moving averages, there's also key technical levels here below the 50, now below the 100, heading for the 200. NASDAQ, again, above the 200 right now, found support. S&P found support on the 200. And, losing that 50 right now. Let's take a look at the VIX. We can take the moving averages off the VIX, making a little bit of a move, not a huge move, again, dropping down to that 18 level. Anytime that happens, generally you get a reversal. Question is, how high will it go? When the VIX is low, look out below. When the VIX is high, it's time to buy. This was that October bottom right in this area. When the VIX was back in that 30, 35 range, if VIX gets up to the 40 plus range, that's bad news for the market. So, the VIX is a good trade indicator if you're trading. The Dixie is on the move. That's not good for, Bitcoin and other risk assets. The 10-year on the move a little bit, rejected off of that last, level of 4.085, trying to get back to that 4% level. Will we see 4.3? That will definitely put pressure on risk assets. The big surprise lately was oil was on the rise, which has rejected today. But, in an upward trend, putting in that, higher lows. And then now let's take a look at Bitcoin. Bitcoin about ready to work its way down and retest this, once again, this 21,400 level to see if that holds. And ultimately, what's the most important is that 20,000 level. If that holds, Bitcoin can continue to consolidate in this area. If not, obviously these lows back here in October will most likely get tested. Ethereum kind of on the same track. Still, same kind of consolidation area, following the trend. And then, of course, all of your major altcoins all pretty much doing the same thing. So, these are all just risk assets responding and reacting to risk on, risk off environment, which is all about the cost of capital, the availability of the capital. The one thing is there's a lot of cash on the sidelines waiting to be put to work. So that's what's keeping markets afloat. And, all we can do right now is wait and see what the Fed is actually going to do. And if we get any guidance telegraphing on that 50 basis point rate hike, which it kind of looked like Powell is telegraphing. So if the market interprets it as such, it's going to continue to work its way down, price that in. which means lower levels, breaking these previous lows. So these are the things I'm looking at. I'll see you in the next video.